striking miners at Anglo Platinum have accepted the company's latest pay offer and are returning to work. This marks further shreds of good news in a sector that's been bruised by drama, tragedy and cyclical downturn. Joining us from Cape Town as we look at our mining saga, Peter Major, mining analyst at Cadiz Corporate Solutions. Hi, Peter. So, Peter, looking
Hi,
at what's happened this week in Amplats in particular, would you say that there are any winners? And if I could tag on to that, how does the final settlement compare with some of the initial demands?
In a way, everybody's a winner because this is over. But if people were very honest with themselves and they went home, closed the doors, took out a piece of paper, they'd see how bad they lost. But everyone's lost. And so it's now a victory because everyone's come together. They've agreed not to fight, to work together. And yes, the workers ended up settling for less than these real crazy demands they made. Because if a mine even tried to pay 50% of what those demands were, its shareholders would have dumped all the stock, the banks would have called in the loans, and you would have had no mine.
So some devastation there, Kevin. I'm sure you've got some thoughts on that. But if you just think, Peter, on clawing back to a normal situation at these mining operations, at what point do you think there will be some normality?
I think if everybody works together genuinely, normality is 9 to 12 months away.
Sure. That's a long time, Kevin.
Peter, your commentary during the last few months has been obviously very insightful. Which of the companies in this sector are you perhaps having a look at? Do you think are worth looking at? And which perhaps do you think need a bit more time to see how things are developing?
Boy, we get these questions every day from our clients. If you're a bull on platinum and you think platinum's going to soon go up to 1,700 an ounce, 1,800 an ounce, I think Lonmin has the most gearing by far, and it's fallen the hardest, and it will go up if the platinum prices go up. If things get tough out there and the platinum price goes lower, Amplats has the most assets to work with. It could theoretically close half its mines and have earnings go up from where they are today. Impala's maybe the most balanced, but I think Amplats and Lonmin have the most recovery potential, but dependent on the platinum price.
Well, let's stop there at the platinum price. And I know you've been asked this question, I think, since the beginning of the year on the platinum price and the impact of these strikes on the platinum price. Initially, I think the feeling was that these strikes won't even move the needle on the platinum price. What's the feeling now?
Boy, after 3 months of Armageddon, they've certainly moved the needle. They've eradicated the supposed 600,000 to 800,000 ounce surplus. And 12 months from now, I think we'll record the lowest production in 11 years. So that's got to be good for the platinum price.
Peter, one of the longer term problems that I see perhaps eventuating for platinum is technology. I mean, where are we on the technology front? Is there a possibility that, and I use the word loosely, alchemists might find some sort of chemical substitute for platinum and palladium in autocatalysts? I mean, I know they've been working on this thing for a long, long time, but I mean, in your estimation, is that a likely possibility in any sort of reasonable time frame?
No, I don't think it is, Chris. You're a better chemist than me, but we've heard of all these breakthroughs, potential breakthroughs, since I became an official analyst in 1989. And I don't see anything closer now than in the last 20 years. Platinum is very unique, and sure, there's substitution between platinum, palladium, a little bit of rhodium, but I haven't seen anything come close to substituting the PGMs for autocats or for auto cracks in petroleum refining. So I'm not too worried about that, but I'm worried about, is the market getting fairly full of platinum and maybe they don't need as much as we used to think they do, and our mines are quite high cost and probably can't cut costs too much more. So they could lose another 20, 30,000 people in the next few years, put more people out of work just to get the supply demands more balanced.
Peter, just on the technology side, a lot of the mines after this year are reviewing their mechanization strategies and for over the next few years. What are your thoughts on the mechanization prospects and whether it's feasible or not, and how long it would be to start incorporating, and specifically for the platinum sector, obviously?
You know, Kevin, I think this mechanization is so warped and so misrepresented. Man's been mechanizing for a good 10 to 12,000 years. But is it efficient mechanization? And it's always related to the men running it, and to the ore body, and to the economics. And I use this example a lot. A friend of mine was a civil engineer after college. He got a job in Pakistan. He had a choice of having 1,000 men supplied with sledgehammers to make gravel for a road, or bring in a diesel lorry, a diesel generator, a crusher, and a front-end loader, and employ 5 men. And the cost worked out the same. And we can't mechanize in narrow reef mining using front-end loaders, dump trucks, and automated drill rigs. We can use smaller, lighter, handheld drills that have double and triple the power of an air-powered drill. So we'll have less men drilling, faster, safer, and they can get paid more. So mechanization can be from small little utensils to giant loaders across the spectrum.
Peter, I want to pull it all together. I'm just listening to your voice and your body language. There seems to be a lot of anguish when you think about the platinum sector, and I just want to know if this extends to mining in South Africa. Is there a future? We know deep level mining, in those sectors things are tough. What are the bright spots for us in our mining sector? We know some of the big players are exiting South Africa and Africa.
Yeah, the bright spots I see are the macro factors. And that's what was negative throughout the 80s and 90s, were the macro factors. Worldwide demand is great. Capitalism's taken over the whole world, so everybody's spending more even though they don't have it. They're demanding more, requiring more. Population's over 7 billion. The world is printing money like there's no tomorrow. We've got more valuable minerals than number 2 and 3 put together, who's Russia and Australia. Our currency's weak. So all the macro factors are great for our mining industry, which should be great for our country and its people.
Peter, we're going to end on that note.
We just have to have the will.
Exactly. We're going to end on that note. Thank you, Peter Major, mining analyst at Cadiz Corporate Solutions. So there you have it. So Kevin, are you just looking at your portfolios, your client portfolios, are you comfortable having an exposure to mining? We know the valuations have been low for some time, and if you're a value investor, some of them would have said it's the way to go.
Yeah, it's been a long year for the platinum sector. We were cautious on the platinum sector entering it, but as things have developed, we've actually started accumulating. But we're sticking to Impala at the moment, and a little bit of Northern, mainly because they've got the lowest cost mines. Look, I agree with what Peter said. As long as you're fairly bullish on platinum going above $1,700 an ounce, then I think there's a fairly good prospect for as an investment case for the next 2 years. However, things could go the other way. Yes. We think that there will be a fairly decent recovery.
There you go. Chris, half a minute, your views on the mining sector and possibly platinum within that.
We don't have any direct exposure to platinum. We got out about a year ago. We do have Anglo-American, so we get that indirect exposure. But look, in the longer term, yes, I do remain bullish. And today, I think Susan Shabango came out and said the installed capacity, embedded value, whatever expression you want to use, of South Africa's minerals is calculated today at 30 trillion rand.